Let's bring in Wes Crill. He is vice president and senior researcher at Dimensional Fund Advisors. Now, it's interesting here today, Wes. From the market reaction, it's as though everything has changed. Or maybe I'm exaggerating, but this is a big rally that we're seeing here today. Is this an accurate pricing in of both the vaccine news and the presidential race news, do you think?
Yeah, and good morning, and thank you for having me on today. I think this is a great example of how many factors go into market prices every single day. People were thinking last week, trying to kind of weigh what the outcome for the election was going to mean for their portfolios for the stock market. And then you have a reminder today that there's still many other things going on. We still have this global pandemic surrounding us. We're still in a recession. And then you see the news with a new development for the vaccine, and you see market prices react. So I think it is a helpful reminder how many different components go into market prices. And just in the context of the election and markets, this just being one factor that drives the performance of the market. It's something that we've been doing a lot of research on because it's a very natural question for investors to ask. Is there a connection between who comes into the White House and what I see within the stock market? When we look back historically, we have about almost a century worth of US stock data overlaid with presidential elections, 24 different presidential tenures in total. And 19 of those presidential tenures were associated with positive stock market returns. So I think it is a good reminder that markets tend to continue to march upward no matter who is in the White House. And as you see today, there's many other variables that can ultimately impact the direction the market goes.
Wes, your firm has over 500 and almost nearly $530 billion in assets under management. That's a lot of money. You guys are major players. Where are you going to make some of those big bets sector-wise now that the election is starting to become in the rearview mirror here?
Yeah, and if I go back to first principles here, so if I think about what the impact would be of the result of the election and who's in the White House, let's just say I'm running a business. Okay, so what's my objective as a business owner? My objective is to service my clients, to build out my client base, to become more profitable. That's true no matter who is in the White House, no matter what the outcome is of the election. And this is an important thing for investors to remember, that when you buy a stock, you're buying shares in a company, not of a political party. And so this expectation of a return, that's going to be the case no matter who is in the office. And, when investors are looking for opportunities out there, whether it's individual stock, whether it's a sector, it's always important to keep in mind something that is a fundamental tenet of Dimensional's investment philosophy, which is markets are forward-looking. Market prices are reflecting the aggregate expectations, the information that is known to all market participants, and that includes how different securities are expected to perform depending on who is in the White House or what they expect to happen in the future. And so that's a good reminder that it's important to be broadly diversified, because whatever your expectations are, however you think the market environment is going to impact certain securities, that is very likely already reflected in current market prices, which means you want to hold a broadly diversified portfolio of stocks, because ultimately it can be the things that you don't see coming that can be the biggest drivers of individual or sector stock market returns.
And Wes, I guess related to that, we saw the violence with which the market sold off back in February and March. I mean, the market was down 15% before I think the general public had even heard of COVID-19. And we look at it on the flip side today. Are you surprised by the magnitude and the speed with which we've seen that discounting of the future from investors?
I'm glad you mentioned back in February and March, because I think that's a great reminder of how we do not know when market returns are going to show up. If you look at March, you're coming off of that big market downturn where the inception of this recession started to begin, when people did start to become aware that we had a global pandemic upon us. And what did we see in the month of March? We saw over $600 billion, almost $700 billion go into money market funds that month. And then what did the stock market do subsequent to that? Well, starting April 1st, over the next 6 months, global stocks returned almost 30%. So I think that is a very helpful reminder and kind of contextualizes what we see today, that markets can surge without warning and without many people kind of seeing this coming. And that's why it's so important for investors to be consistently focused on their asset allocation, to have a patient adherence to whatever their investment goals are. Because, again, you don't want to be in a position to try and predict what markets are going to do and then miss out on the great returns that they do deliver.
Wes Crill, thanks so much for spending a little time with us. Vice President and Senior Researcher at Dimensional Fund Advisors. Hope to see you again soon.